All right. Welcome to another edition of Daily Mortgage Rates Live with the Mortgage Calculator. Just give us a few moments here while we go live on all the different platforms, and we will get started with the show in a minute. Today's topic will be our fix and flip or rehab loans for our investors out there. Definitely a popular request and a little bit of a complicated deal, but we'll try to break down a nice, simple example today. So thanks everyone for joining us. If you have any questions, you can feel free to drop them in the comments or the chat. We'd be happy to help you out. Or please get with any one of our licensed loan officers. We have over 400 licensed loan officers in 35 plus states. All right, so it looks like we are live on all the different platforms, so we'll go ahead and get started for today. Welcome everyone. My name is Nick Hershey. I'm the president of the Mortgage Calculator. We are a lender that offers all different types of loans, conventional, FHA, VA, non-QM, and some of our unique commercial options, such as our fix and flip loans for our investors out there, which is our topic for today. So if you'd like to get a quote or a full breakdown on any of the things we go over today, please drop a comment there. We'd be happy to get back to you, or go to our website and one of our loan officers would be happy to break that down for you. So let me go ahead and get into today's live rates. So the first thing we want to look at here, one of the best indicators of where rates are, is going to be our 10-year Treasury yield. This typically tracks right along with mortgage rates. So a lot of back and forth with the news. You guys have all seen a lot of news with the government here lately. So we see a little bit of volatility, but I always want to put things into perspective here. And if we pull it out to 1 year, we're still at nearly 1 year lows, which is great news for everybody out there. So while the news every day is a little bit of back and forth and the markets do react back and forth, we're still looking pretty good for everyone out there. So now let's pull up our actual live rates for today. So with our basic live rate page here, we always use the same scenario to compare across all the different options. So we use standard single family home, 1 unit, 500,000 purchase price, 300,000 loan amount, corresponds to 60% loan to value, 760 credit score, 40% debt to income ratio. Obviously we can go a lot higher on a lot of these different programs, but because we're going to compare all the different options, we use this same scenario across the board. So first up is our conventional fixed for a primary home. So this is our Fannie Mae, Freddie Mac, what you typically think of when you think of a mortgage. So rates coming in today, 5.875, not much change from yesterday. Final APR 6.135 there. And we usually compare that to an FHA option. FHA allows a little bit lower credit scores typically and a little bit higher debt to income ratio. And that comes in today at 5.25, but the final APR 6.162, a little higher on the final APR because FHA does include upfront and yearly mortgage insurance for that program. And for our eligible vets, active service members, and surviving spouses, we do have our VA programs. So those are amazing for our eligible borrowers. Rates coming in today, 5.375, but notice the final APR 5.639 because there are much lower fees there for our VA eligible borrowers in this example. And the final government option here, USDA, only for properties in USDA eligible areas, typically the rural areas of the country, and for our borrowers that are eligible for that program. These are amazing options. So we always want to compare that typically to an FHA option. You see rates for USDA coming at 5.125, final APR 5.791 with all the fees included for USDA. A little bit lower there than FHA in the same example. So definitely compare that if you are shopping in those areas. And now we get into some of our more unique options here under our non-QM program. So these are going to be our alt doc options using full doc, of course, but also bank statements, 1099s, P&L statements, all kinds of different self-employment options for our borrowers that need a little bit of flexibility. So for our primary home, we could get our non-QM options as low as 5.875 rate, final APR 6.145. So just a touch higher than our conventional options, which is amazing. We can use bank statements for nearly the same price. And for our investment properties, we can use our non-QM options as well, bank statements, 1099s, P&Ls, or full doc, of course. Rates coming in today, 6%, final APR 6.321. And we'll compare that to our conventional option for a investment property coming in today at 6% rate. Final APR 6.311, so just a touch cheaper for our conventional option than our non-QM. So pretty amazing for our borrowers that need to use those non-QM options. And one of our favorite programs, our DSCR, stands for debt service coverage ratio. No income or employment needed. We simply use the estimated rents from the property to determine the debt service coverage ratio. And as long as the ratio is over 1, this option works here with a 3-year prepayment penalty here. Rates as low as 6%. Final APR 6.284, so actually cheaper than conventional, which is absolutely amazing when we add that prepayment penalty in there. And we can add a 5-year prepayment penalty as well to sweeten the deal. And rates today come in at 5.875 if we had the 5-year prepay. And final APR comes in at 6.157. So that beats 3-year conventional and our non-QM alt doc. So absolutely amazing that DSCR is coming in at the top of the list there. And we do have DSCR with no prepayment penalty. That comes in at 6% rate. Final APR 6.321, so a little more expensive than conventional for no prepay, but still an amazing option for our investors out there. And we do have our second mortgages. These are non-QM fixed rate second mortgages. So often a little bit better option for our borrowers than a HELOC because it's not variable, it's fixed, and rates are typically a little lower. So our option to use our non-QM second mortgage, even use bank statements for income if we need to. Rates come in today at 7.75 for a primary home to get that cash out without touching the first mortgage. Final APR 8.096. And use the same program, our fixed rate second mortgages for an investment property. Of course, we can go full doc. We can do our alt doc options, bank statements. And for investment properties, we even have a DSCR second mortgage option, which is pretty amazing to get cash out of that investment property without touching the first mortgage. And for an investment property, 8.75 rate, final APR 9.161. And now let's get into our topic for today. So with our example, we're going to, again, go over a fix and flip loan. So first, I always want to pull up an actual property. So I was just looking in the general area here. Good option here in the area where I typically look at. Here in downtown, notice some amazing giant homes right here going for $1 million plus. And we have this home that obviously needs a little bit of, so like most fix and flippers are going to look for something in a great area that just needs a little bit of updating. We have, so this is a good option. So this is our example here. This is a purchase going to be for $1,000, and we're going to pencil in a budget of $250,000 for rehab in order to hopefully rehab this into something that looks more like the home on the left, and those for about $1.5 million in this area. Obviously, we're going to have to add more bedrooms, maybe 1 or 2 bedrooms, and some square footage as well, and update everything. But hopefully, $1,000 can get us a little bit of space and a little bit of extra bedrooms. So here is the actual quote that I set up using our example. Now, this is going to be our most general fix and flip example. We have a ton of different options. This one works for first-time flippers as well as experienced. Obviously, if you have more experience, the interest rate can be a little lower, and we can increase the leverage a little bit. But since this is a show that goes out there publicly, we want to make sure we have an option that will work for everybody that watches today. So this is an actual fix and flip example for that exact property we just pulled up. Again, we're going to go for a $750,000 purchase price, and we're going to target for a $250,000 renovation budget. Typically, anything over $250,000 is going to be a major renovation. And will be treated more like a ground up. So this is a great option to kind of max out everything and hopefully make a great return. So you see here, we were going to use a 9.5% interest rate. This is going to be a 1-year fix and flip loan. So we get to flip the property and either sell it or refinance it within 1 year. And the rate's going to be 9.5%. The purchase price is going to be $750,000. We're going to have to put 10% down on the purchase, so 90% loan to value on the purchase, and we can get up to 100% of the rehab funds. So we can see here that's going to be the purchase loan. We're going to see the fix and flip. So our after repair value, our targeted sale price is going to be one. That would be amazing. Our cost for this deal, when we add everything up, including interest and everything for the whole year, is going to be $1.1 million. And our estimated gross profit, if we can attain that value, is going to be $382,000. That's an amazing deal. And in this example, we were able to get a loan to cost of a little over 90%. ARV of 61.67. See all the different analysis points here. Return on investment of 32%. Pretty amazing numbers if this all works out. Not every deal works out, so make sure it's realistic. And here you can see that we added the interest for the year in there. We added the discount points, the cost of the loan, and that included the total cost. and allowed us to get our final estimated gross profit we just broke down. So that is how you break down one of these deals. A pretty complicated deal to put together. We're going to have to do either a sale or a refinance here at the end of the 12-month term. But these are very popular requests, so I want to make sure our team understands how to do them. And of course, our borrowers out there that are interested in starting their first fix and flip, this would be a great example. A little bit of a big problem, over $1 million, probably not going to be your first example right in the area. So that'll wrap it up for today. If you have any questions or want to get your own quote on your exact scenario, please get with one of our team members. Again, we have over 400 licensed loan officers in 35 states, and we can even do fix and flip loans and other commercial loans in other states as well. So thanks everybody for joining us, and we'll be back next week with another edition.